Ms. Galante's schedule be the gentleman from Kentucky, Mr. Barr.
Thank you, Mr. Chairman, and Commissioner Galante. Thank you for your testimony today. And let me apologize in advance if I'm covering territory you've already covered. I had to step out a little bit, but wanted to just get your feedback on some statements made by other regulators in the financial services sector. A press release from the Consumer Financial Protection Bureau in January of this year indicated that it was the government's policy to make sure lenders offer mortgages that consumers can actually afford to pay back. I would assume you agree with that basic government policy.
Yes, is the ability to pay rule.
Right, exactly. And the same release stated that unaffordable loans helped cause the worst financial crisis since the Great Depression. Would you concur with that statement?
Yes.
And in addition, the CFPB release stated that lenders should not set up consumers to fail. I also assume you would agree with that basic statement.
Certainly, and when you talk about unaffordable and unsustainable, the CFPB clearly has written rules so that we don't get into the situation that we've gotten into today, not FHA, but as a society of no documentation and high rates.
No, I understand, but as a general policy, obviously, the government shouldn't be doing anything to set consumers up to fail. That is a policy that this administration has advocated.
These policies are to assure that no one sets up consumers.
Sure. And as I understand it, there are now, according to the GAO, 16 financial literacy programs across the federal government, and there's 4 homeowner counseling programs across the federal government. I take it that the FHA is supportive of these financial literacy programs. Is that correct?
Absolutely. We actually have an Office of Housing Counseling.
Right. And so, in just doing a little bit of homework on some of these financial literacy programs, I was looking at the website money.gov, which is presumably a website set up as part of the Office of Financial Literacy, a new government agency that was established as a result of Dodd-Frank. Is it fair to say that you support these efforts to counsel individuals and make sure that people are measuring their ability to repay before undertaking the obligation of home ownership?
We do, and we actually announced, and I don't know anything about that one, so I'm not endorsing whatever that site is. But we actually have, in our report to Congress, indicated that we want to bring back what FHA had in many years ago, a robust housing counseling effort for new home buyers to FHA.
In one of the links on this money.gov website, this new website, I suppose, it actually, there's no substantive guidance for the consumer, but it does redirect the person to the FDIC site, which has this section on there that says to buy or not to buy a home. And I'll just read it to you and have you respond to it. Home ownership may not be for everyone. It's a big financial commitment, starting with the initial shock of your purchase, including a down payment and fees, followed by years of monthly mortgage payments, real estate taxes, property insurance, and maintenance costs. That is the advice that the federal government is giving prospective homeowners. Do you agree with that advice?
Yes.
Okay. So the follow-on question then is, and I understand your testimony earlier. I did have the benefit of hearing what FHA is doing in part to address the negative capital ratio and some of the reforms that you are, by administrative measures, taking to try to deal with some of the challenges that the agency faces. I think you testified that there's some credit box tightening and premium changes and whatnot, which I applaud the agency for taking those steps. But generally speaking, do you think that encouraging lending to individuals in this category, the category of low credit scores, people who can barely get by on cheap upfront pricing, the 3.5% down payment, the low down payment requirements, do you believe that encouraging lending to that category of individuals is consistent with the advice that the federal government is giving across all of these financial literacy programs.
Again, to be clear, FHA provides 30-year, fully amortizing, fixed-rate loans underwritten to borrowers' qualifications. Again, have we tightened up some in terms of how much income you need to have, how much after payment of debt that you need to have? Absolutely. And these are, including low down payment, very sustainable mortgages for these families over time. And we think these are affordable and appropriate. Now, I'm not saying there aren't further things that we should look at in terms of overall credit quality, but these are affordable, sustainable mortgages.
Time of the gentleman has expired. There are no other members in the queue. I'd like